Hi there, and welcome you all to a new episode on how to start a business. We are still talking about controlling a business. We already covered a number of aspects within the controlling a business, such as employees, such as good manager, customers, and cost management. Today, I will jump to another aspect of controlling a business, and that aspect again is very important, which is finance. Finance. Now, the realization of competitiveness may well depend on a satisfactory financial position. So let's talk about the financial position today, and we'll see how we're going to achieve this financial position. Now, first of all, no one can deny that no business can be started without capital, or as we call it, the initial capital. Without capital, and even if that capital is borrowed capital, although I don't like it and I don't recommend it because it is risky and it might cause a problem for you if you cannot settle or pay back the borrowed capital, but is what you can start your business, even as I said, with your borrowed capital. Therefore, capital is the first and the most important, I say, part of your finance, okay? And without this capital or initial capital, you cannot start your business. But we should bear in our mind, although it is the most important aspect of finance, it is not the ultimate dream. It is not the ultimate purpose of the business. It is not, the end of the story, if you want to put it in this phrase. Capital is important, but let me ask you this question. If you start your business today with 1,000 dinars, and do you like to see the same 1,000 in your account after 1 year? Definitely the answer will be no. And this is why you start your business, because you have a goal, you have a dream, you want to expand your business, you want to improve your business, okay? And therefore, I want to see the 1,000, maybe 3,000, maybe 5,000, even if it is 2,000. But now, how to achieve this 2,000? It is not by the initial investment, the initial investment or the initial capital. Yes, as I said, capital is important. It will give me, I would say, upholding my business. It give me the initial, to start my business. But to make a business, I have to make an operation. And the operation, as we agreed last time, and many times, it's the sales, your sales. And before your sales, if you are in, let's say, manufacturing or producing, you have to make the production, and then you make the sales. Sales is the good. Sales is, as I say, is the lifeblood of the business. Yes, and sales is important, but the sales or the owner of the business or the manager of the business is the one who, in fact, always study the time between sales and receiving the sales, which means they're receiving back the money of the sales, especially if they or he or she sell on a credit. Here we're talking about credit sales. If it is a credit sales, so money received after the sales is more important than the sales. But of course, if it is cash sales, it is the same. So therefore here, for the cash business, I said, yes, sales is the lifeblood of the business. Now, you make the sales, but don't forget that to make the sales, you have to spend money on the sales to make the sales, which we call it in accounting, the cost of goods sold, or the cost of sales. So the cost of sales is important, and if what for some accountants are it is as important as sales, because from this cost of sales, and even in manufacturing companies or manufacturing businesses, they bother about the cost of production, but after the cost of production they bother too much about the cost of sales, because from the cost of sales they can calculate their net income, which is the second aspect of the finance. After the initial capital, you have to make your net income, and to make the net income you have to make the sales, and to make the sales you have to also spend some money on the sales, or the cost which we agreed today, it is the cost of sales. Now that's profit, and especially if it is cash profit. When I say net income here, if you are, let's say, a small business, or if your business is only on cash, therefore, okay, bear in your mind that we are talking about cash profit or cash net income. That cash net income need to be added to the initial capital in order to increase your capital and to achieve your goal. This is your main goal, to increase your capital. You start with 1,000. After 1 year, you want to see it 3,000 or 5,000 or whatever is that. Therefore, this is the second aspect of finance. Also, to generate this net income or cash income, you have to bear in your mind that to preserve your cash and make, let's say, a good control or good management of cash. And managing the cash does not mean it's only controlling your and counting your cash at your tills or at the bank, but also it's mean that other aspects which is related to the cash, such as inventory, which mean don't buy too much inventory, as I said in episode 1 when we talk about how to start a business, and keep it and overstock it, and then it become old or obsolete and you make that loss. Also, cash management include managing your customers, managing your receivable, which mean that eliminate the credit periods given to the debtors or to the account receivable or to the customer. Don't give them too long time. Okay, 60 days may be too much for your business. Make it 30 days. Maybe you can, if you sell an credit, make it 10 days or 15 days. It's depend on your business. Also, cash management means you have to manage your account receivable. The opposite of debtor is a creditor, or account receivable, the accounts payables. So therefore, you have to increase here the period taken from supplier or from a creditor or from account payable. You don't pay them too fast, especially if your, for example, let's say your account receivable period is long. Make the account receivable period or credit period longer, because you want that cash. You might need it, you might invest it, you want to buy something. Okay, therefore, always pay to the creditor after you receive your cash from your debtors or from account receivable. Also, it's include, as I said on last episode, cost management. Okay, pay less advertisement, employ only necessary staff, and don't waste your time. Okay, paying too much for employees. Employees are very important. I told you, I agreed with you that you have to be very careful with them. You should be friendly with them. You should like it, but you are not responsible to employ too many employees. You don't need them, so you have to control your cost. So that is, again, another aspect. Now, therefore, you bring the initial capital, you make a profit, you manage your cash. Also, don't forget to manage the working capital, which is in fact close to the cash management. Working capital, we mean when we talk about the debt or the loan you take from the bank. Every business take loan from the bank, but I don't recommend the initial capital, as I said, but for the operation, you might need loan. You might need an overdraft facility, but always make it temporary. Don't rely too much on the loan from the bank or from the supplier. Always depend on your operation from your business, and that is the beauty of the business. When you depend on business and you generate the profit and expand, that, as I say, this is the beauty, and this is the the good thing about the business, and it is your dream of that business. But when you make, or when you find yourself, you need money, but you have to make the study before you go to the bank. When you need the cash from the bank, or when you need the finance from the bank, and are you able to face this debt? Are you able to pay the interest? Beside that, you manage your cash. Do you have cash to pay the interest and the principal? Don't let the interest exceed the principal. Otherwise, you will be in the trouble. And more important than that, when you are borrowing from the bank, make sure that your current asset or the short-term asset should be more than your short-term or current liabilities. Otherwise, you will end with overtrading. And overtrading means your liabilities or current liabilities exceeding your current asset. And if it is permanent, that means you are losing the business. Losing the business, that means you might sleep at the street. So be careful. So therefore, after you managing your cash, you have to manage your working capital, and before that you have to make your operation, your sales, calculate the cost of goods sold, study that business and focus on receiving that money from your sales. And then before that, at the top, number one is the initial initial capital. Now also, when we talk about let's say finance, bear in your mind that you are in business not to stay the same position forever. Your dream may be more than that. You started as a sole trader. After 2 years, say, I need to make my business a partnership. After 3 years, I want to make it a private company. After a few years, you want to make it corporate. Maybe you can make it a manufacturing company. All that is what is good. You can do it. And especially if, as I said, if you are a good businessman, if you are a good manager, you can reach to this point. You can achieve your target. And as I said, a businessman, our good businessman and a good manager is the one, in fact, after expanding, because as I said, every business has its, I would say, limitation. The more it's grow up, the limitation is reduced or the problem is reduced. And at the end of the day, you say, I achieved my target, and as a good man, or as a good businessman, or as a good manager of the business, I'm the one who in fact make a link between finance and accounting, production, sales and marketing, and distribution. That means I create a very good, strong, beautiful value chain for the business. And from that, I can say, this is my financial position. And then I make a study whether the financial position is improving or deteriorating. The financial position is the one which make me stand on the market long, the one which help, or which in fact will make the banks come to me rather I go to them. Everybody, every businessman, every good manager, every company, small or big, like to have a very healthy, a very good, and a giant financial position. Thank you very much for today, and see you next time, and we'll talk about another aspect of controlling a business. Bye.